Your Excellency, the Office of Higher Civilization Global Representation from United Nations, Ambassador, past President of the United Nations General Assembly, President Nasser Abdulaziz Al Nasser, Your Excellencies, my distinguished Director, Ali Al Malki, Your Excellencies, distinguished guests, dear friends, fellow bankers, ladies and gentlemen. It is my pleasure and privilege to welcome you all for this interesting and exciting content. I could see the house is completely sold. It's an extraordinary turnout. With the changing face of the world, we thought it's appropriate to recognize and interpret these changes to commercial advantage. We recognize the world is changing. We recognize politics and economics are on different tangents. Financial economies, even after 8 years of financial crisis, are reeling under pressure. Real economies are redefining the scope and performance. As Mr. Nasser has mentioned, free market dominance in socialistic economies are a selling force. Capitalism has become more compassionate. Consumer protection plays a big role. Financial economies still converting as real. Extraordinary set of deliberations. Extraordinary set of reorganization in the political makeup. Even after 8 years, we have seen the global growth is still not sustainable. Last month, International Monetary Fund had the spring meeting in Washington, D.C. The global growth has been revised upward by 0.1%. In October, when we all met as an annual gathering, we had global growth predicted as 3.4%. Now it has been moved up 1 inch up, 3.5%. Global trade, still not taking real momentum, is half of the global growth. Conceptually and critically, if you look at it, when you had free trade, when WTO is getting contentious, even then, it was double the GDP. Now it is half of the GDP. 1.6% was the last year turnout in terms of global trade. Global investments, of course, it's moving in the right direction. Advanced economies are still grossly under pressure. 2% is the aggregate growth in terms of developed economies. United States is set to be in the right direction. Last week I was in New York at the invitation of Qatar Exchange, where the listed companies were getting together and showcase Qatar as an investment destination. The feeling and the momentum in America is very much positive. The inflation is set to be in the right direction. The economy, though, has not performed in the first quarter as much as everyone aspired for. 0.7% was the turnout. International Monetary Fund predicting not less than 2.3% could be the current year performance. Japan is going through turbulence. Possibly they may turn out 1.2% growth this year. Brexit and the snap poll are all set to be reorganizing Britain. A 2% growth of GDP is realistic. We've seen Euro, sense of optimism after the French election last week, is set to be igniting less than 1.7%. European Central Bank still is in the process of easing the accommodative monetary policy and ensuring money supply comes in and economy is fueled. All sort of interpretation when it comes to monetary policy and fiscal prudence. Conceptually, they are still aligning in substance. The emerging markets, if you look at the bigger picture, 4.5% is realistic It's measurable. Within the framework of emerging markets, China should be doing 6.6%, even though they can do much better with reorganization of shadow banking plus market liberalization, with yuan globalization, which my colleague is going to speak in a few minutes. We have bigger opportunity for China to globalize in substance as a universal currency. We have seen the reflection of India as an emerging power, truly as a functional democracy, setting its new footprints. And balanced scorecard says it's the best performing country in the world today with 7.2%. Possibly it can accelerate 7.5 to 7.8% with the kind of market liberalization India is propelling. Russia, after the Crimea annexation was put to sanction, they can come out of the rebels. 1.7% is possible as a momentum. South Africa should be doing, even though it was downgraded to junk status, not less than 0.8%. The analysts have got their own ways of convergence of politics and economics interpretations. And Brazil, which is reeling under pressure, should be doing not less than 0.2%. So if you look at the bigger picture, global growth is said to be gaining momentum. But we haven't achieved the global sustainability. Eradication of extreme poverty was a certain discipline. Ensuring universal health care is a certain discipline. Global warming and climate change is not an ordinary issue for us to throw aside. Change in climate patterns is destabilizing the food security around the world. How can I eradicate extreme poverty without recognizing global warming and climate change is the main cause of it? Extraordinary set of reorganization required in terms of partnership. Building this partnership is our mission, is our commitment to ensure global sustainability, global growth in real order. While trade, as I said, it's not moving in the right direction, we have conflicting signals coming out of various administrations. Should we accept the Trans-Pacific Partnership? America says no. It's not only a free trade, it has to be fair trade. That's what the interpretation we had, the G20 meeting, and also the finance ministers who met in Italy as we speak. Today, they did say, the US Treasury Secretary said very clearly that it has to be a fair trade. It means bilateral discussion has to take place, and redefining this partnership needs consensus in real order. Interlinking investment and trade is the right convergence. That's the interpretations America and the rest of the world is looking at. We have issues in terms of contentious issues between developed world and developing world in terms of a free trade, we recognize. Currencies were manipulated to a large extent. When you start printing money, being accommodative, improving the money supply, it means you're weakening the currency. Export-driven economies can accelerate their exports. That's the interpretation. But currency is a barometer of an economy. If you start administering manually, if you start altering by material means, by improving the money supply, you are interfering in the money market. That's not going to be an easy solution. Mechanism is getting this started. And we have seen the reflection of currency manipulation, currency alterations in the commodity market. We have seen commodities are nosediving. We have commodity-driven economies like the Gulf are facing extraordinary set of turbulence. Last 2.5 years have been a telling story for us to redefine. Gone are the days when we used to have $100 plus as oil price, when we used to have current account surplus, investable surplus. We have current account deficit last year. All the states have reported within the Gulf definition, and possibility of financial strength is restoring with oil price being stable between 50 to 55. Today, we have seen the momentum. OPEC and Russia is coming together, non-OPEC and OPEC coming together and try to set in production targets. And again, supply chain glut will be minimized, and possibly we'll have an average price between $50 to $55, irrespective of the currency reorganization. There are all sort of global reorganization, transformations taking place in real respects. Within the definition of the changing face of the world, we recognize this part of the world is going through realignment, transformation in real respects. As I said, 6 states put together were running on fiscal deficit and current account deficit last year. Now, there is a possibility of, according to IMF indicators, there is a possibility of 1.5 trillion will be the GDP. And there is a current account surplus of $25 billion, which is 2% of the, as a percentage of GDP, 2% could be the surplus. All states should run in surplus, taking account $45 as their budget disciplines. There is a possibility of current account surplus, if not fiscal surplus. Expansionary fiscal policy is the name of the game. From hydrocarbon to non-hydrocarbon movement. It means interpreting the opportunities in terms of revenue streaming. And that's where we have a distinguished speaker who is going to speak on VAT. What sort of revenue models government can create. What sort of implication it has got in your operational business modeling. We need to understand these dynamics. The deregulation was the slogan which was accountable for the financial crisis. When asset price deflation started in the United States housing market, the world at large has realized the prime collateral is lost, subprime crisis started, and world at large has paid a heavy price for the investments. Then the money liquidity was the major issue. Liquidity crisis moved into a funding crisis moved into a solvency crisis and sovereign issue like Greece. So you have extraordinary set of transformation. G7 has become G8, G8 has become G20. We start interpreting the world in different respects. Inclusive growth, financial inclusion, protecting the common man, ensuring Main Street man is equally important as good as Wall Street. Recognizing these challenges, we need to have policy convergence between economists and policymakers. And this sort of reorganization, what you call re-regulation, was spelled out. Now, American administration is talking about deregulation. Should we dispense the Dodd-Frank? Should we come back to Glass-Steagall, where we can split the investment banks and the retail commercials? Should we redefine the trade? Should we question the Climate Protection Treaty? All sort of interpretations policymakers are stumbling with. The world at large is still in the crossroads. How do we redefine? How do we recognize all these changes? What is happening within the Gulf definition? If I say 1.5 trillion is the productivity of the Gulf, what does it mean to Qatar? What does it mean to the rest of the other Gulf states? If I split the numbers, 707 billion is going to come from Saudi Arabia, which is still running in deficit. The kind of transformation and initiatives they have taken up in the last 6 to 8 months is extraordinary. I was very critical in Bloomberg in October. When I was in Washington, somebody questioned me about Saudi's fiscal policy. They have taken initiatives which are responsive. There's an alignment between fiscal policy and monetary policy. The capital market is opening up. Free market dynamics are interpreted. Privatization is coming up, including Aramco. Then comes UAE, which is reporting not less than $407 billion as their GDP, which runs in current account surplus and fiscal surplus. Even last year, there was one country, Kuwait and UAE, was reporting current account surplus. Diversification is the strength of UAE economy. Then comes Qatar with 176 billion. Qatar's sustainability can never be challenged. Let us understand its dynamics. The problem is measurable, manageable, and controllable. We have reasons to believe Qatar can report not less than 3.5% growth, even in the current context, the highest performing Gulf country, which will run in current account surplus for a change this year, which will run with a fiscal deficit of 7%, with the expansionary airport, seaport, road, rail, free zones. You have to have 2022, you have to have infrastructure creations still can cost not less than 176 billion as the GDP. Kuwait, with so much investable surplus, is underperforming. It is going to be in contraction this year for a change. Unfortunate. But the realistic interpretation remains it has to go through the negative growth. Irrespective of the sovereign funds they have, they should be contracting not less than 0.5%, and which is going to report not less than $125 billion as their GDP. Then comes Oman. It has been downgraded to junk yesterday by S&P. Should be reporting not less than $66 billion, and Bahrain should be reporting $34 billion. Sum it up, it is 1512. And if you look at the individual interpretations, you have reasons to believe the oil price will cost not less than $50. And these economies can still wither away the pressure. And over the period of time, with the alignment of monetary and fiscal policy, they can still reach a sense of balance. Financial stability can never be undermined for these Gulf economies, where we have 45% of the world oil, 20-25% of the world gas comes from. So what this seminar has got to do with this? We work in an environment which is interconnected, which is interdependent. We live in a village, as Mr. Nasser has mentioned, which is shrinking wall, is one wall, borderless wall. We are all global citizens. Human dignity, humanity is the right interpretation we all have to recognize. We understand the changes which are happening in Qatar is measurable. The government has come out with arbitration law, which is productive enough to interpret the issues in the business houses. There are enough reasons to believe that's the need of the hour. The contractors are questioning the project owner in execution. And again, there are issues between the contractor and subcontractor. We need adjudications. We need commercial code to come to perspective. We need clear recognition of the settlement of these disputes. So we thought it's appropriate to showcase what are the changes which are coming up in Qatar. To speak about this concept, I have a gentleman from Qatar Investment Authorities, Mr. Ihab Meher, who is a distinguished senior legal counsel, who is going to speak about the arbitration law. He is the head of the governance and government relationship in Qatar Investment Authorities. And again, it's not confined to the arbitration alone. There are public-private partnership models evolving to be a fine combination. We have already seen privatization has been the right direction. It's not the government alone. Government can govern, and you need private players to prosper, to have sustainable journey. We need to recognize this public-private partnership. There is a new promulgations coming up, which will empower the private enterprises. There are interpretations in terms of regulatory alignment required. That is the need of the hour again. There are projects which are built in on the principle of public-private partnership. Umsaid, we have independent power projects. We have in Russell Farm, project A, B, C. Already there is commencement of public-private partnership model. Tomorrow hospitals or schools, healthcare or education, we have to have this public-private partnership model evolving. That's the right combination. You need to see the private ownership comes in. The government facilitates the entrepreneurs. To also inculcate a habit of social entrepreneurship, you need to understand the dynamics of any economy is contingent on sustainability. You don't want ups and downs, volatility in terms of performance. You need sustainable economics. You need to build in small and medium-sized entrepreneurs. It's not only big corporations. You need to bring in small and medium-sized entrepreneurs. You need to have support from the government. That's why Qatar government has initiated Qatar Development Al-Damin programs. I used to be the number one. Doha Bank used to be number one in terms of small and medium-sized entrepreneurs support. Way back in 2004-05, we used to support entrepreneurs, their innovations, their infrastructure creations. Now, all banks are supporting the mission. QDB has got spelt out vision in terms of Al-Damin programs. They are not only funding through the joint risk management with the banks, they are also supporting the equity. ITMAR is another example which they are commencing. They fund you the capital. They support the innovation, Qatar Incubation Center, to align with the overall economic mission to support small and medium-sized entrepreneurs. You have an opportunity. That's why QDB plays a big role today. And you have a representation from QDB. Mr. Sultan Kuwari is here, who is a capability leader. I like the title. You need capacity to build with the right kind of skill base. That's why I thought it's appropriate to bring in a speaker from Qatar Development Bank to showcase what are the development in small and medium-sized entrepreneurships. What sort of social entrepreneurship is evolving? What sort of innovation is happening in this country? We also recognize, in addition to Qatar Central Bank, we have a financial center which is supporting the brand equity of Qatar. The combined capacity of the commercial banks are limited. You need international institutions, international financial institutions, whether bank or insurances or asset management companies, to house in here and support the overall economic momentum. Qatar Financial Center played a big role right since 2005. Doha Bank was the first bank. I used to organize sessions in Washington, D.C. Way back in 2005, I took the new team and we showcased to the international banking community what Qatar is planning to do in terms of Qatar Financial Center, what sort of onshore, offshore model we are evolving. Since then, it has grown leaps and bounds. Today, hundreds of institutions are housed in Qatar Financial Center. There is a representation from Qatar Financial Center to showcase what sort of reorganization taking place in terms of financial center, how you can leverage in terms of business opportunities. The regulatory alignment and the promotion of investment opportunities in Qatar has been exemplary. And to elucidate further, we have a fine lady, Pro Morris, who is the managing director of Qatar Financial Center, is with us to showcase what sort of evolution is in the offing. It's not the end of it. And again, as I said, we need to look at revenue modeling for the Gulf states. And VAT is a acceptable solution, interpretation of the opportunities and ensuring a small tax is being levied on the overall agenda. To understand what is VAT, what sort of accounting and business modeling you have to do to interpret this and comply with the changing regulatory framework in your own business model. You need to look at the intricacies of VAT. To elucidate further on this subject, we have a KPMG partner, Mr. Craig Richardson, who is here with us to showcase the overall implications behind and the interpretation behind VAT as a new regulatory frame. So all sort of changes which are happening in the economy. Regulations are nothing but opportunities. You devise a business model which is a win-win. That's the way to go. There's nothing as competition within the framework. It is complementing your business model. Regulations are deregulated to make sure business enhancement comes in. And that's the very purpose we thought it's appropriate to bring in the substance at large to see how you can interpret these regulations as an opportunity and how you can remodel your business to promote maximum value to all the stakeholders, customers, shareholders, regulators, and society at large. So, ladies and gentlemen, thank you for your kind presence, and I compliment the speakers who have accepted our invitations and being here, and I compliment a distinguished gentleman and the ladies who are here to witness as an audience and what sort of information analytics you can take home to make it commercially useful to you. Thank you once again for your participation. Thank you, ladies and gentlemen.